In a high-stakes world of finance, fortunes can be made or lost instantly. But skilled traders make money regardless of market conditions. They thrive during a recession or an economic expansion. A popular saying that defines the market is bulls make money, bears make money, pigs get slaughtered. What does this saying mean? Listen in to Jeremy Cavale's story. Jeremy Cavale began his career as an ambitious young trader. His rise within Société Générale, one of France's largest banks, was nothing short of meteoric. But in 2008, Société Générale suffered a massive scandal thanks to Cavale's rampant, unauthorized trading. Like 90% of all retail traders who lose money, Cavale had gone down a dangerous path when the markets began to turn against him. A pig is a greedy and reckless investor who doesn't follow prudent financial practices. The pig is the investor driven by the desire for quick riches. They often take unnecessary risks, ignore research, and let emotions guide their decisions. They might chase after the latest fads or try to time the market, leading to losses and financial disaster. Thanks to a low barrier of entry to trade today, everyone can be a trader. The next best trader can come from any part of the globe. But here's the catch. Not everyone can be a successful trader. The world is full of washed out traders. The truth is, emotional trading is every trader's Achilles heel. You can have degrees in finance, economics, or unrelated fields. Jeremy Cavale's background in finance was not a guarantee of success. So what does it take to join the creme de la creme of the trading world? Usain Bolt said that for me, performance is everything. It is what matters most. That is why I work so hard. Dedication, training, mental strength, resilience, strategy, teamwork, and passion. It's a harmonious blend that separates the pig trader from the bear and the bull. The bear thrives amid pessimism and falling markets. In bearish markets, prices decline, leading investors to sell or short assets to capitalize on the downtrend. Legendary insurance stock investor Shelby Davis says, "Bear markets make people a lot of money, they just don't know it at the time." That means each market correction always has a new high waiting in the wings. The bear has learned over time that a falling trend is a less competitive industry where they can run circles around the bumbling pig trader. As Warren Buffett famously said, stock return to their rightful owners in a bear market. The bull, on the other hand, thrives in times of optimism and rising market. Their favorite market grows out of pessimism and feeds on skepticism. It will mature when optimism is at an all-time high and begin to falter when euphoria kicks in. For this reason, the late ex-Morgan Stanley hedge fund strategist Barton Biggs once said, "A bull market is like sex. It feels best just before it ends." At the euphoric stage, the impatient will sell their holdings at par or loss because they're frightened by the decline or want to get to where the grass is greener. So what characteristics set apart the bulls, bears, and the pigs? The bear and bull investors understand the market conditions and adjust their approaches based on whether it's a bullish or bearish phase. They have learned how to follow the trend. The rationale is simple. Trends persist for a period before reversing. By recognizing and embracing these trends, investors aim to ride the wave of market sentiment and capture potential profits. While following the trend can be profitable, it's not without challenges. Trends can reverse unexpectedly, leading to losses if investors fail to exit their positions in time. You must either sell or buy when the trend ends. Then the biggest force behind the trend is the institutional investor. Hedge funds can accumulate substantial positions in individual stocks. Their buying or selling of these assets triggers movements that other market participants follow. You must follow Wall Street's big fish to remain profitable. Go against them, and you are toast. Additionally, unlike most retail investors, the sharks trade with billions of dollars worth of assets, spreading their bets across diverse assets. Most retail traders, on the other hand, focus on short-term timeframes. As a result, day traders without a specific strategy extract little profits from the whipsaws after a deduction of transaction costs. So how can retail investors follow the trend and stay profitable?
I was looking at some data in the options market, which showed that retail investors made up around 22% of options activity.
When I started trading, I was full of confidence. I made some decent gains initially, but then the market took a turn I didn't anticipate. I lost a significant portion of my profits due to rookie mistakes. I was the pig. That experience humbled me. I realized that the market is complex and there's no shame in seeking guidance. I joined the bulls and the bears in trading communities. I learned from mentors and surrounded myself with humble, experienced traders who navigated those treacherous waters before. I learned from them that trading isn't just about making money, it's about preserving your capital too. I understood Jesse Livermore's famous quote, "Plan your trade and trade your plan." Trading is a continuous learning process. Seeking support, including having access to advanced tools and knowledge, can make your journey smoother. In the world of trading, knowledge is power. Risk comes from not knowing what you're doing. Master the markets. This is the reason why we built HYPOTHETICAL. The HYPOTHETICAL platform and community gives you the same edge that keeps institutional investors profitable and protects you from emotional trading. We recognize that everyday retail traders lacked the essential resources, including the necessary edge and tools to navigate this industry successfully. That's where we step in as the global research and development team, ready to provide the support and cutting-edge tools that traders from every corner of the globe need. Whether it's Alaska, Miami, Los Angeles, Paris, Frankfurt, Durban, Lagos, Hanoi, Tokyo, Singapore, Bangkok, Sao Paulo, Buenos Aires, or even the most remote corners of the globe. We aim to keep you on a growth journey, equipping you with the edge and tools required to become a profitable trader. In May 2023, we introduced a preview of one of our initial tools, now available. This tool revolutionizes market analysis like never before. With this tool, you won't need to wonder about trends anymore. We save you 90% of the time you spend looking at charts thanks to the plus 2K traders from various communities who embraced this tool. Your feedback gave us the strength to complete this first step. Now we're introducing a more advanced and enhanced version, incorporating all your feedback and anticipated improvements. Visit www.hypothetical.com and secure your spot today. The pigs, the retail investors, do not build knowledge and an edge, do not understand where the market's going, and eventually get slaughtered. Investing is your responsibility, and with HYPOTHETICAL, you now have an armor that sharpens your edge and shields you from the pitfalls of the market. Remember, the stock market is a device for transferring money from the impatient to the patient, from those without the edge and knowledge to those who truly possess it. My name's Anthony, and this is HYPOTHETICAL.